My friends. So here the thing is, I'm gonna give you a quick update because a lot going on in bank, with the banks and stuff like that. So I want to give an update because I don't want anybody hanging. I'm sure you already got your own things that you're running, but just from my perspective here and what's going on. Okay, so here's what we got. I was trying to say why this is all washed out here, but anyway. So here's my count value. I was short using the TZA, the Russell, which paid off very well today, and then I was short the Nasdaq. SQQQ, and I should have took it off this morning, but I got greedy, and that's where you be careful. But so I got half my earnings cut because this is the overall. This is today's percentage turn, which isn't bad. 3.47% in one day in the entire portfolio. That's pretty good. I mean, that's beating the most average. And this week I beat almost every mutual fund company out there, right? I'm not trying to brag. I'm just trying to tell you the truth that you can beat these things if you just. I mean, I don't even know how they're paid money to. I know they have to do more risk to reward issues and stuff like that. But anyway, they got a lot of money to move. But anyway, so here's the thing: what I'm having with this is that here's my plan: is that there was the gold miners had a run up today. It was like an 18% run up, which it was just a skyrocket. Okay, and so what I'm going to do is I'm going to come in and short the gold miners here either tomorrow morning or the day after. Because I'm hoping that they gap that thing down again. And then I'm going to use the ETF. I think it's called. You have to get 3 times the bear short of the gold miners. Kind of knew that area. It's called GXDN or something. Okay. Well, anyway, so I'm going to come in 3 times as short as go. Now it's very dangerous. So this is a high risk trade because we got fleet away from from the stocks, everything. Even though they used everything they could to keep the Nasdaq propped up. I mean, they probably using plunge protection team money with the government, especially when Biden comes out speaking. And the plunge protection team is real. They use your government money is going in there buying the stock. So you're already involved in this bank bailout in many directions, folks. And that's what's frustrating. You know what I mean? We're bailing them out again. They're using the government. They said maybe. Well, you already are. There's no maybe about it. And so if we actually did, I bet your plunge protection team money was used. And the banks are throwing money at it too, keeping this market propped, the Federal Reserve, right? Okay, so there's a fleet, right? So we even saw China. China barely took a hit today on this. It's surprising. That means their fleet to take money overseas. Even though China has its issues, it's a little bit more of a channel up and down versus a complete slap in the face over on them. So anyway, I'm not going to talk about the politics of this with the whole bull crap. Why aren't the bank regulators? They knew this was coming for over a year or so, folks. This was all planned. This is not, this is all organized, and they were ready. They've known this. You think all of a sudden this last week they said, "Oh my God, there's some banks in trouble." No, because last year, I'm not sure if I did some video on this. We knew that when the BlackRock or where the heck that thing is in China, when they went down with their loans, I said there's somebody else. Boy, there's never one cockroach. There's somebody else coming. I thought it'd be sooner, ended up being later, and now's the time. Now they're exposing. So give about a week or so. I said it. And when I heard about this first, and I think a week or so and hear another bank. Well, sure enough, boy, we heard another bank in New York went belly up, boom, another explosion, right? And they're not done, folks. They're not done. Some will never even come forward that they'll try to recover them behind the scenes. Now, what we're going to see happen next is we're going to see some banking over in Europe or even Greece or France or one of these other countries is going to blow up next. They let us take the lead, as usual, to show the world the damage. And all of a sudden, you're going to hear another bank explode, probably in Europe very soon. Probably not the Bank of London, but some other bank's going to go boom overseas. You watch, because everybody's going to get their hands caught in the cookie jar. And we were promised back in 2009 bubble that this wouldn't happen again, that they're going to control inflation, which they didn't. The Fed lied. They said we're going to control inflation, do a better job because we let the housing market get out of control. Well, you got inflation again. Nobody's held responsible, right? And so then all of a sudden now you got the banks in trouble now again, and housing's in trouble too, because those housing prices, my folks, they're inflated. Come on, you got, even in California, I know it's richer. They got houses pushing $800,000 for a 1 and 2 bedroom house. You kidding me? And the rent is skyrocketed, right? So it's the same thing. The debt's got to be pulled back in, right? So anyway, so we're playing the same game. Boy, the memory of individuals in this world is just amazing. They can forget within 5 years. They said that's the average, memory of expectancy of the average American is about probably 5 years. Heck, I give it about a year before they. So, and here's the way they've done a mutual absurd distraction again. Remember how they distract you I call it the change the topic of what the theme is, right? Because this is very interesting, because I know you know this, but what blows my mind about this is that we already had inflation issues, and we had companies who were laying off, and the market was already in trouble. It was already in trouble, right? So then they come in. Now I'm going to head some with this. Then they come in and they slap out a bank failure on top of this to really make you in trouble. But then everybody forgets what the original problem was. See how they just rotate the problem out? So, it's like, oh, that wasn't really the problem, because now we have to come with a different solution, see? So now, the original problem was the market was already in trouble through all these other things. So now they want you to believe that the only problem there was the banks, because the market ran up today. So if you hadn't had the bank announcement, it probably would have sold off anyway, see? But see how they run it up today, because they said, oh, well, we have Biden come out there and do his little puppet parade and lie through his teeth, and he just does his job thing. And so you got him, and also you got they said it's going to all be backstop. So they run the market. Oh, hooray! It's like, oh, we got a touchdown. Even though we're still losing the game, see, it's that last touchdown, because nobody pays attention what happened the previous quarter that is already going down. See, don't you love how they can quickly flip in and flip out a different card or theme just immediately to make you take your focus off you. And they constantly rotate to the next thing and say, we got the solution for that one too. And see, and how they can bring the market up even when it should already be down already. You are kidding me. This is the way they play the game. So they get a bump out of it, and then it goes back up and down. But this is all going to crash, folks. It's been planned. They're going to wipe out the middle class, the lower caste, and all this. And this is all, and that's why let's not worry about the whole situation. But let's try to take advantage of it, right? While we're here. Okay, so that is the truth, and I'm just like, you got to be kidding me. I mean, seriously, are the American people are saying, oh, the American people won't allow the government to do that. They did in 2009, and they're letting it happen already today because, like I said, it's already unfolding. They're through the Pledge Protection Team. People are already suckered into it, right? And too big to fail. That's what we heard. Too big to fail. And then we're in Goldman Sachs, the CEO at that time said, which they're in trouble too, by the way, right now. They're already in trouble for regulatory issues beyond financial crap. But they probably got both on their hands now. But anyway, so, yeah, he comes out there and says, oh, we're just doing God's work. Yeah, I think you're working for the evil one there, bud, because you're going to crash. But anyway, let's not go into that, because remember, we're here about keep it in perspective, keep it level, don't give it energy, because that's why they do it. We don't give that, we don't feed it, we don't give it energy. So, but we do acknowledge it, right? And we come in and defend when we need to. So I'm going to bring up, let's see, real quick. Oh, let's see, I better close that one, because that might have information on my account. And I'm going to bring up something here. I'm going to have finance real quick. Should have had this ready, but I want to show you. Let's see whether you got the futures already. I'm telling you, I played this game in 2009, and boy, I had to fight the Fed and everybody. I'd short, and then sometimes I'd go long, and I get knife cut. And so anyway, I know how to play this game this time. I'm going to be smarter and wiser. Let's see. Oh, finance. Did it say Yahoo? Yeah, Yahoo Finance. Yeah, here we go. Let's go ahead. All right, so do this real quick, and then I'll cut this short. I didn't realize it's already doing. I'm going to pause it while it's loading. Okay, here we go. They already got the futures up. Isn't that amazing? Because, see, it takes less money to move the futures than it does when it goes up. That's why you'll see those massive sell-offs. You'll see that until about when the market opens, until about 10 minutes before the, I'm trying to think what time they'll be in New York City, because it's 7 o'clock here. It's 20, like 10 or 20, about 10 minutes to 15 minutes before, it's like the market opens, and then about 15 minutes later, you'll see then they'll see them stepping into try to recover as the volume slows down. They'll start stepping and start buying. That's what they did this morning. And then those skyrocket. You could see the institutional push, because you would see that thing, and they were fighting a wind. That was amazing, because you'd see like the NASDAQ jump like 0.4% up green, and then immediately go back to zero. And that was like institutions are like, we're out of here. The Fed's buying. So and then they bleed it off. And then they come back in again with plunge detection team money or something and play the damn game all over again. It was wild watching that. I mean, sure, you could see institutions jumping and bill and ship, and they were like, well, we'll sell to whoever takes it, even if it's the people, because they don't care. Anyway, and nobody's held responsible. Anyway, so looks like crude, I don't know if that's current prices, a spot or not in the futures. I don't know, but that's kind of crazy, that crude, because there was kind of a run. No, crude's been selling off anyway, never mind. There was a run to gold and silver, and it was up today. So it looks like the move's already moved. And so I was trying to get the gold miners. So the fear factors dropped. Now the VIX is not up to date. The VIX had a run at 26.52. Boy, I tell you, over 25, you are pushing. You know they're going to step in when that thing goes above 25, and that's why you got to take off some shorts or go for broke on that. It looks like the crypto that's current prices, I think. We're seeing the dollar exchange. Now, here's the thing is, too, what's going to happen. See, the dollar is it's climbing the day against, but here's the thing is, I thought the dollar is going to crash, and it'll probably, every time it's going to pop down, if you see a bank failure, that's why they might have one over in Europe or something. They'll use that as a leverage to force the dollar to go back up, right? They will do that. Not kidding you. They'll probably, I know it sounds crazy, but they kind of want a strong dollar, because everybody's or is it a fleet to devalue their dollar? I'm trying to remember what everybody's trying to do. I'm sorry, God, I'm trying to think of what that is. Well, we're in an inflation game, so the problem is you deflate your dollar, it gets worse inflation. And what the Fed wants, boy, that's a hard one to say. They want to deflate it. Let's see, I'm trying to think. But anyway, so everybody's a race to I think to deflate their dollar, right? Well, I'll have to think about that. I'm sorry. But, what's going to happen is whatever that leverage is on that seesaw, that they're going to use Europe and other, when the banks, they collapse, it's going to cause the dollar to rise. Okay. That's going to happen. Okay. And I'm just a little tired. I apologize. The bonds are going to try to protect the debt market as well. It's all about debt. And Gregory Marciano is better about that with his YouTube channel, right? So anyway, I've been on Benzinga a couple in the morning, and they actually gave me good kudos today. It was kind of cool. Was it Ryan? Yeah, Ryan said, hey, he said, I've been watching Captain Kirk, and he gave me a big thumbs up. He said, listen to this guy. He has some good points, which was cool. I like that because anyway, let's see. So what I was going to show you, what's the thing to show you? Well, I guess I'll do a real quick one, and it depends on how fast this thing loads. Let's look at the IWM real quick. I'm not sure if I have my settings here with this, but we'll try to get full screen here real quick. And I know it's late, and boy, the markets are getting open a little bit, so some of you probably... All right, so let's see what we got here in the IWM. Okay, look at those red down bars. Now, here's where you got to be careful, though, because this... let's see if we get a little pin here. You got three black crows, right? So what happened is you might level off here, and like in this, where it might actually turn somewhat green possibly. It's like when you get three white soldiers too, it'll pull back. So market, been pushed pretty hard, and there is a gap there above us. Now, not all about yet, but eventually they'll try to maybe fill that gap unless this is the big move. So we're gonna have to just watch that. But the volume is out the roof, my friends. That is sick. I mean, that is some heavy volume. And right here is the volume stick right here. Okay. Now the MACD has rolled over big time. I'm gonna pull that so I can actually control this a little bit. The MACD it's approaching areas. Let me pull that up here. That is getting close to oversold. Now, I told you that here's the mark of the crossover right here. Okay, this is the mark where it crossed over the MACD. And when that let me do that again, sorry. You had that crossover, so it went sideways, but that's when you start adding into your shorts. It took a long time to look at, almost a month of just grinning and teething it, right? But look at this. It finally it's going to fall through, and it finally rolled over, okay? So now we got to wait. So what you could do is you could wait, but the thing is you could take some pain. When it comes back down here and rolls back up and does a crossover, and you know that's when you can take off your short if you want to trail it, or you can start stepping out lightly here if you're on the short position. But when you get that crossover, then you got to start being cautious. And like I said, it's already pretty heavy oversold. But I mean, in 2009, you get big ways down and then recovery. So we don't know that volume. We don't know we just got to be day by day, right? And so anyway, let's do a QQQ real quick. Oh, all right. By the way, if you're the president of the United States, wouldn't you have came out and said, I want an immediate investigation of all banks for the American people, that I want those bank regulators that failed to do their job out there immediately and start scanning over those balance sheets to find out who was going to drop the ball next, so that we can be proactive and start taking care of business. Oh no, but see, we don't have true presidents in this country. They just kind of play the puppet job. And what's a I hate to say it, what is the quickest way to cause damage to this country? Yes, a nuclear bomb or bombs could cause damage, but what is the quickest way to cause damage to our country? Bring the people down through their money and everything. Yeah, just bring the whole system down, and then you just got them bent over. I'm serious. It's a war that is just, people don't even see it. It's blindsided. It is the best way to bring the country down. Anyway, so we got the QQQ, the same thing going off here. There was the crossover to the downside, and there, you had some rebound here, but boy, it's still turning down. It's got more room to go, folks, even better than the Russell. Yeah, and it doesn't have the 3 cars. See, that's the problem, is all the indexes are all over the place because they're shuffling money around, and that tells you that the market's run out of money, because it used to be, even back in 2009, boy, they'd all move in sequence. Just like all the boats in the ocean. Now you got one on top of the crest, one below it, and one in the middle. I mean, the SPY, the Dow, they're all over the place because they're just trying to do the best they can, man. The game, they're just flipping money. I mean, when I saw the NASDAQ up 1%, I was like, really? And it pulled back to 0.5% by the end of even after hours. I was like, that is a stick job like you've never seen. But why did they do that? Because they said that the semiconductors and also all the software companies and all the tech companies were in the biggest danger of the default with the banks. So they wanted to really we're going to protect those to make them look good. I mean, seriously, if you want to buy the dip, you kidding me? Oh my gosh. So let's take a look at this visually. What you got is, you don't got anything but a disaster, because this thing, even if they recover this, you're going to probably get an M pattern, and it's just going to take off down anyway. I don't see anything in a pattern, even a handle. I don't see a W pattern. I don't see anything right now that can form to save this thing. So other than it's going to bounce and then down the tank again. Now, I'm not trying to be a pessimist or could be a perma bear, but I'm looking at this chart. Oh, you can already see the M already formed there before. Bing, bing, bing. And then a retrace and bing. But see, they could do another M and then down. But boy, it was an M pattern there. See this? It was in the M pattern. Remember, a W is a win. Get out of there because they're going to go long. It is nasty, because now you got the M here, that previous one. And look how they stick saved it. So you got this M. You got the M pattern here. Oops, that's not a terrible line. Well, anyway, again, I'm trying on my finger. You got that M, and boy, that cuts off. You're done. I'm trying to see if there's anything further down the road that would. Boy, I'm trying to see if there's. Oh, I do see something, I think. Let me see if I can span this. Well, nothing really close in the stick bars, but not anything really clear. I'm trying to think. Right in here, yeah, right here could be the next level, right there. And I don't have the moving averages. I should. But see, even this MACD, it can go way down here before they turn that NASDAQ up. It can bow itself way down here. Remember, energy, frequency, and vibration. It's kind of like that. The market moves just like that. Anyway, I'm going to stop this. I should have brought up that other. Well, anyway, you can look it up. I apologize. I'm just. You can look up so I'm going to look into shorting the gold miners. Yeah, I know it's a dangerous one, but sometimes there's no risk to reward. So I'm going to start stepping in that thing tomorrow if they gap it down. Okay. If not a gap down, I'm going to have to think about it and sit tight until that happens. I should bring a chart. So maybe tomorrow I'll bring up a chart about that especially to make that move. Now, what are the other ones I've been watching? Oh, real estate still has some move down. That's another good one because real estate is still kind of inflated. It's an easy target, but it's slower though. It takes time for them to lie, and also housing prices based on interest rates, Fed movement. Was it DVR or DRV? Is it DRV? Did I get that right? Wrong? Yeah. Let's see what that is. It's the bear. Boy, they even pushed. Did that take 4% down today? That is surprising. That they came in and boy, I tell you what, a lot of people have been buying houses when their bank runs. And yeah, whatever. Let's see what this looks like here. There's probably better ones too, like this, but I just got interested because there's some traders on Benzinga. Whoa, man, that is called engulfing thing. So it's already a little bit high though on the short of the thing, but I can see something already that right here, getting close. That's your next level of that sucker. It's going to. I'm trying to see if there's any pattern. Yeah, it's got an inverted head and shoulder kind of. See, like this. So that's why it launched. Oops. Remember I talked about inverted head and shoulders on you. Oh my gosh, why does it not let me do this? What is going on? Is it? I don't know. Oh well. Anyway, it's got an inverted head and shoulder. All right. And how's that look on its MACD? Oh, it's overbought a little bit. That's probably why it's flying, because look at the MACD on that thing. But you got to be careful with sectors. You got to look at the overall market. See how it's really up here, and it really needs to. Yeah, it's going to probably go sideways a little bit. Yeah, because it's a little bit overbought, but not terribly bad. But man, I'm telling you, you don't want to do it now because you'll be chasing it. You'll be chasing it. You need a small retrace and then try to get that sucker. So the risk reward ain't too good on that one. All right, take care. Love you all.